Next up here is Nvda. Closed as a red hammer candle today. A lot of volume showing a tremendous amount of interest here since May 10th. We're now up from 115 to 140. How much higher this can really go is really anybody's guess at this point. But since the trend is still up, I might as well go ahead and analyze it as my typical hammer candle here. What I do see here is a nice trend that has formed from the previous 2 days and potentially a broadening wedge. As you can see, price is kind of opening up from here to here is a little bit more narrow than here to here. Just basically means that price action is expanding a little bit more, and whichever way it fails to actually meet at that price point is likely going to go the other way. For example, if it fails to come back up to here, it's likely to come all the way back down to this level and maybe even break down below it. Since the daily chart here is still very bullish, a couple levels I will throw on here as supports, as my hammer candle trades are almost all bullish. First of all, it is going to be the low of this candle of 136.5 roughly. Next area is going to be basically where this gap started here is 135.20, which this 8-period EMA should come up to as well. So I'll go ahead and throw that level on there. A couple of points to watch for there. Now Nvda does move quite a bit on an intraday basis, so I will be fairly tight with my stop. I don't want to give it too much of a risk there. So with that in mind, initially I will have a support entry set up right there, stop loss just below. If that fails, I'll likely be looking for a possible test of this line since it's intersecting with the previous price support area, and this 8 EMA would be coming up to here as well. So that also would be support entry with a stop just outside of this range, and that would end up being about 30 total cents of risk. Because we have now set in basically a downtrending resistance here, price target would have to be about where that is. It's going to be 139. I'm not turning completely bearish on this yet, but I don't see it making new highs yet because of the strength of this sell-off and the strength of this sell-off, and we've now put in a new low in relation to the initial move up. So that'll be my trade plan going forward tomorrow. If it gaps up on the open, I'm not likely to do anything unless it has a tremendous amount of volume that pushes up over 139, at which case I would go ahead and do long above 139, call it 05, and a stop loss just below. Give it about 20 cents of risk, because if it breaks out and comes back down below it, it just means it's not ready to go yet. So that's my trade plan for the video going forward. We'll see what happens.